Great job getting this far. This will be our final installment for this particular class in technical analysis. I take requests. For years, I would put off doing advanced courses because I really love basics and introducing people to basics. And people were screaming and shouting and writing me emails saying, hey, we want to do an advanced options class. And so I finally broke down and did it. And there's been some clamoring for an advanced technicals class, and I have some great friends I could teach that with. So if you've liked this technical analysis and you'd like to go beyond and you think it's valuable, send me an email and I'll see if there's enough interest to justify an advanced class on this. However, I think a basic knowledge of technical analysis can take you a long way. That's a lot of fun. So what we're going to do now is we're getting ready to move from the information gathering side to the action side and the risk management side and the cash flow side. And so now what we want, I think, is to, before we move into cash flow, is to start putting all these things together to where we can develop what we call a market opinion or a stock opinion. In other words, we say, well, where do we think things are going to go? And there's a couple things to keep in mind here. So here is a small, we'll make a small segment here that helps bring all this stuff together before we hop into the second half of the course, which is cash flow and risk management. So how do we develop a market opinion stock opinion? Well, first thing we do when we trade as a team, on my team, we have three of us that trade together. And we look at the broad market first. We look at the big fundamental picture in the broad market first. We do our sovereign fundamentals around the world, and we say, hey, what's the Fed doing? What's the big picture here? And so we might look at a big, broad chart with lots and lots of time in it and say, how's the S&P 500 doing? Are we bearish? Are we bullish? What's the Fed doing? And what's the basic trend? So I would look at this right here and I would say, well, we're definitely having, higher lows and definitely having, higher highs. I'd call that an uptrend, pretty decent uptrend. So until the market changes and tells me something different, I'm going to lean a little bit towards bullish stuff. So I'd start there and say, all right, we might find some bearish candidates, but we don't like to fight trends too much. We want to have an even amount, and we want to have lots of ways to make money, but generally we're probably looking for stocks that follow the trend. It doesn't make a lot of sense to fight City Hall. It doesn't make a lot of sense to fight the Fed. It doesn't make a lot of sense. Like, personally, my personal opinion is I think it's wrong just to print money and not have it backed by gold. To have a man-made money, gold is God's money. A dollar is the Fed's money, and Bitcoin's the people's money. Maybe I've heard Robert Kiyosaki say that. But I have been fundamentally frustrated with the big picture fundamentals for over a decade. I've seen our $1 trillion deficit. I've seen all this stuff deficit-wise, and I'm like, man, I'd hate to invest in a future like that. It's going down. And yet, technically, the other policy of the Federal Reserve, if you're going to pump trillions of dollars into an economy, you definitely have to look at riding that wave. So I have fundamentals fiscally that say this is terrible, fundamentals monetarily that say short term we're going to give you heroin. If the market's on heroin, ride the wave, ride the wave. So we've been bullish for many years technically, because we just simply say, look, it's higher highs and higher lows, and we're out with some periods in here, and then we get back in, and that's how we've traded. So that's the broad market. Sectors. So you can write these down if you want. These are iShares, what they call iShare. It's a group of ETFs, and ETF stands for Exchange Traded Fund. These are not like mutual funds, but they are a collection of stocks, but they're relative to an industry. So what these ETFs seek to do is provide an investment vehicle that mimics sectors. And they try to say, look, if the energy sector does well, our ETF will do well. Or down here with materials, if the materials do well, our sectors do well. So we put these in what we call a watch list in our software, where we can just click on them and we can get charts on them very, very quickly. And we look at the broad market, and right here we see, broad market, breaking out to new highs and doing really well. Not quite ascending triangle-ish, but that's the pattern we see. Well, we're going to see which sectors mimic that, beat that, or fall behind. So we look here at financials, and we see a bit, not necessarily an ascending triangle, right? We'd like to see this come up a little bit more, but close to, and it's kind of broken out, and it seems to have mimicked the market a little bit. So maybe we say, you know what? Let's run a search for opportunities in financials. The market seems to be doing well, and this XLF, this financial sector, seems to be doing okay. It seems to be on the rise. I mean, certainly if we take it from this standpoint, we could say, that's almost an ascending triangle, right? Almost, except for that little area right here, it really would be an ascending triangle. And so we say, well, are there stocks in here where we could ride this wave, especially since it looks like, the financial sector's broken out already, which means that any other stocks in this, they might break out too. So let's combine a bunch of stuff here. Now this is kind of cool, because here we've got a whole bunch, and here I've got 3 that describe the types of stocks I want. I've got 1 fundamental criteria and 4 technical, and here they all are. So I want stocks between 20 and 100 right now. Okay, 10 is fine too. I want them above the 20, above the 50, and above the 200. You see that? I want patterns of an ascending triangle. And I want a nice low peg fundamentally, and I like to be U.S. companies, and I want them in this financial sector. Do you see that? And it just goes to say what Arthur Levitt said, we should be the most informed generation. We have so much intel. So I run the search, and here I have a company I'm actually familiar with that I think I've traded a few times, Lincoln Financial. This is a financial company. Look, it's right in that ascending triangle. Well, the sector's already broken out. So the chance it breaks out, could be okay, and if it doesn't, it doesn't. I don't know. I don't know the future. But here I can see they have this ascending triangle, and I like that. Look at that. And now maybe it can break out for us, right? So we might do a stock trade. Now, would we buy calls? Would we buy stock? Would we, sell in the money or out of the money puts? How would we use this? Well, that's for the third pillar, cash flow. But you can see there's a routine there of start with the broad market, compare the sector charts to the broad market, find one that you seem to be leading the market or at least doing as well as, and then run a search for stocks within that sector. And so we call that a top-down approach. And we find things with technicals and fundamentals that way. Here we're looking at another one called retail. And Amazon is a retailer, so they've done pretty well, but they've kind of killed the rest of that sector, it seems. At least that's who they're blaming on, this Amazon effect. And you'll notice that this is not in an uptrend, necessarily. If we look at the big picture, we're having lower highs and lower lows here, right? It's just not as strong, and we're certainly not at the all-time highs like we were in the market at this period of time. So we might say, this sector really stinks. Maybe there's some opportunities to short this right here. And so we say, this time I want to find maybe some wedge downs, lousy PE, price below our moving averages, 10 to 100, and consumer goods. Or retail, and we see these go down. We get some trading ideas. So you'll learn more about this top-down approach as you attend Mentor Club and as you practice yourself. But let's add to our practice now. Okay, let's finish off technical strong, and let's add to our practice. Okay, start a watch list and start looking. Oh, my chair was squeaking. Start a watch list of paper trade. Now you should have done this already if you came this far, where we have this criteria for bearish and bullish trades fundamentally. Okay, maybe you now go out and you start playing with technical criteria. And the technical criteria we look at is, where's the support and resistance? Do you see a trend? Do you see a pattern? Do you see a candle? What about your technical indicators? Are there any gaps there? And so you start identifying patterns. Now this is tough because we learned 18 different patterns and 14 different candles, right? And so this gets a little bit more involved. I wouldn't let it scare you. Once you find practice, I don't even keep a chart like that, because once you speak a language, you get it. And that's why Mentor Club this is such a great 1-2 punch, because if you come in every Monday when we trade and watch us do stuff, this stuff gets picked up pretty quickly. And so start a watch list, and now you're ready to paper trade. Now we have enough knowledge. If you've gone through these courses, you've done the exercises, you've done the homework, you now have the ability we can actually set up a paper trading account and begin to practice finding stocks, practice looking for stocks. But we gave you several examples of how to find stocks, right? We found technical reasons to find them, fundamental reasons to find them, and we find things that have intel or intelligence that we like. And so I hope you're enjoying your coaching groups. If you're in that program, check the broad market for the trends and the patterns as homework here. Look at where the broad market is, meaning the S&P 500 or the Dow Jones or the NASDAQ or the Russell, and these different indexes. We use the S&P here, and just compare those to the broad market, and your coaches can help you if you struggle. Run a scan for fundamentals, and then run a chart scan look at the chart, then run a chart based on technicals. Now, one of the questions I get is, which is more important, fundamentals or technicals? They're both important. And I can run a scan for fundamentals and look at the chart, or I can run a scan for the chart and then look at the fundamentals, or I can combine them both. Whatever I want to do. Be creative, have fun. Don't get caught up in finding the greatest stock in the universe. Don't look for needles in haystacks. Find good reasons for what you're doing, and know that there's many different paths to heaven. Many different paths to heaven. So now we're going to do this only for the education continuing on technicals, not anything else. And just take it, when it comes to technicals, are you ignorant on those? Not anymore. Are you aware of what they are? Yeah. Did you dip your toe into competency? Probably. Let's practice. That's how you become proficient. Congratulations. In the 4 pillars of investing, we have 4 pillars. You've just completed the second one, which is basic technical analysis. Great job.